Hello kind people of YouTube and welcome back to another video. Today's just gonna be a quick one. I'm just gonna take you through a smaller number of articles than I usually prepare because I just got back in from a very long day and I just don't have that kind of attention span or time today. But I promise daily videos, so you are getting daily videos. Let's jump into it by looking at the markets before we go on to analysis and news. As you can see here, movement is slowing down again with another day at roughly the same market cap we have seen for 3 or 4 days now. 210 billion, almost 211 billion, that is ever so slightly down from yesterday. We see the 24-hour volume sitting around the same amount of 12 billion. And Bitcoin dominance slightly down as altcoins outperform it at 53.7% from 54.1% if I remember correctly yesterday. There are some relatively big winners among what is generally a sea of red. We see XRP up 1.54%, inching closer to Ethereum again, which has fallen 1%. We see Stellar up 7.28%, doing very well here. Getting pretty close to EOS and possibly about to snatch number 5 from it in the near future. And aside from that, not that much movement. 0x up a lot here, of course that has been added to Coinbase. Under some controversy, but I'm gonna talk about that in another video. And aside from that, if we go down here, we see more green in the smaller altcoins, with most of the major coins having a worse day today than everything else. In general, not that much movement. Let's look at some analysis from CoinDesk, from people who are much better at this whole analysis thing than I am. As always, all of these articles that we're going to read are linked in the description. I'm not going to read all of them fully, so if you want to read the rest of ones that I just skim over, make sure to click through. Forcing a Bitcoin price breakout is looking anything but easy for the bulls, with the path to $7,400 being littered with resistance levels. Stepping back, the leading cryptocurrency jumped above $6,800 on Monday, neutralizing the bearish view put forward by a downside break of a trendline support last Friday. The sharp recovery from lows below $6,200 also adds credence to the argument that Bitcoin has likely charted a long-term bottom around the 21-day exponential moving average. Moreover, the repeated defense of the area around $6,000 indicates seller exhaustion. Hence, the stage looks set for a strong move to the upside. However, securing a bearish to bullish trend change above $7,402, which is the September 4 high, is going to be a tough task, as Bitcoin could encounter stiff resistance at following technical levels. And number 1 here is the trend line falling from July highs, which we see in the image here. Bitcoin clocked a high of $6,810 on Monday, but closed at $6,440, keeping intact the resistance of the trend line drawn between the July 25th and September 5th highs. At press time, the cryptocurrency is trading around the trendline resistance of $6,430 on Coinbase. A high volume close above that level would open the doors to the next resistance level lined up above $6,800. Number 2. The horizontal line from the September 22nd high of $6,823. Bitcoin's failure to hold above $6,823 on Monday has established that level as a key near-term resistance. In any case, it is a key horizontal hurdle as seen in the chart above. It is worth noting that horizontal resistance or support levels carry more importance in technical analysis than trend lines, whose connecting points may differ from person to person. And third, the trend line from March highs, so looking much more long-term here. The trendline connecting March highs and July highs is currently located at $7,020 and could cap upside. The longer the duration of the trendline, the more validity is attached to the support or resistance level it represents. Hence, the prospects of a bull breakout above $7,400 would rise sharply if Bitcoin manages to clear this 8-month-long falling trendline on the back of strong volumes. And their perspective for the near future. Bitcoin seems to have carved out a bottom around the 21-day EMA, although a bullish breakout is $1,000 away. A break above the trendline sloping downwards from March highs could be considered an early sign of impending bullish reversal above $7,402. On the downside, the 21-month EMA of $6,123 is the level to beat for the bears. So what we're seeing here is essentially a continuation of a movement we have seen since early this year, with a chance to break out into a bull market, but a bear market being mathematically closer at the moment, which isn't to say that there is no potential for a proper bull reversal. Right now it is looking very, very neutral by most analysis. Let's go into some more optimistic expectations for the near future, because someone predicted some rather large market caps for the crypto markets in general. Crypto can reach $1 trillion market cap based on speculation alone. During an interview with Ran Neuner on CNBC's Crypto Trader, Coinbase alum and crypto investment firm One Confirmation founder Nick Tomino stated that the valuation of the crypto market can reach $1 trillion off of speculation alone. His actual quote was, "I see investing and speculating as adoption. I think it is possible that crypto gets from $200 billion to several trillion on just that. From my perspective, what I'm seeing globally in terms of viewing this new investable asset class, I think that's possible." So the article here is talking about $1 trillion. He is actually talking about multiple $1 trillion. In 2017, cryptomania initiated by individual investors and retail traders led the market to achieve a valuation of over $800 billion. And with the entrance of institutional investors, a multi-trillion market cap could materialize. According to Tomino, an important macro trend that could lead to an influx of investors and capital into cryptocurrencies or consensus currencies is the decline in trust towards governments and large institutions like banks. Various studies conducted by Facebook Research and major technology conglomerates have shown a clear trend of millennials shifting from legacy systems to innovate and trustless alternatives, such as fintech applications. In the long term, he explained that a cultural and gradual shift from trusting large institutions to peer-to-peer systems could direct consumers to decentralized financial networks. My view is that the most important macro trend of our lifetime is people increasingly distrusting governments and large institutions. I see it more as kind of a gradual movement into crypto. I think it's kind of a gradual and cultural shift from people trusting large institutions and governments to using the blockchain. And we of course see this reflected in the voting behavior in a lot of countries recently. Anyway, back to the article. Currently, the cryptocurrency market is growing exponentially in terms of infrastructure, adoption, and institutionalization. Oh my god, that word! Why does it have to be in every other article? The structure of blockchain networks are seeing progress in scalability, stability, and security, fueled by active open source developer communities and ecosystems. Tomino stated that the infrastructure and middleware used in the cryptocurrency sector are rapidly improving, allowing the market to stabilize and appeal to accredited traders and institutional investors. At the same time, what I'm seeing in terms of real adoption is mostly infrastructure and middleware being built to fuel real applications. That's things like scalability solutions, stablecoins, decentralized exchanges, he said. And his back here is more their outro to the article than any kind of actual reporting or news on this. So we see here another voice joining in the chorus of people anticipating a very high total market cap for the crypto markets in the future. Now this, in my opinion, is a sensible opinion. Here he is essentially saying that we have seen 800 billion just of personal and small scale investors, just of FOMO from that, just of speculation. What is going to happen when we see the same thing, but with institutional investors who are bringing many times that amount of money in there? I think multiple $1 trillion is perfectly in line of what we can expect if that is going to happen. And right now the crypto markets are preparing for that influx of money. Every time a new financial product is launched for institutional investors, every time a new large company, a new big player in the financial world integrates crypto in some way, they are getting ready for institutional money. That flow is just going to come crashing into the market at some point, and we're essentially just waiting for when that will be. My bet right now is on the first half of 2019, but that is just where I feel all these lines that we've seen coming up for the last year or so are connecting. It could happen at another point, but I definitely think it is going to happen. And multi-trillion dollar, that seems perfectly possible in that case. Keep in mind, if that were to happen, that would end up at least 10 times the current total market cap, meaning most tokens would probably grow to at least 10 times their value, with altcoins almost certainly outperforming Bitcoin, a lot of them probably going to 20 times or so their current value as a result. Now, of course, as I always say, I am not a professional financial advisor. I'm just giving you my opinions here, so do think about this yourself, do your own research and don't just listen to me, but that is what it looks like to me. Continuing on, some news about Ripple. And you know I always like to include some Ripple news because they have news coming out almost every single day and most people don't seem to notice just how much they have going on. Asian fintech completes Ripple blockchain API payment from Malaysia to Spain. This is a new monetary corridor that I don't believe has been used with Ripple's technology before. A central bank approved Malaysian fintech startup that has specialized in international money transfers has completed its first cross-border transfer on RippleNet, Ripple's enterprise blockchain platform using an API solution. With a payment from Malaysia to Spain, Kuala Lumpur-based Money Match has completed its first cross-border blockchain transaction, a local report from Focus Malaysia confirmed. Now, some extra information here. Money Match was actually announced as a partner for RippleNet. I believe it was in April of this year when RippleNet was first announced. So this is one of the earliest announced partners and this is their first time actually using it and not just on a test run but actually using it for that monetary transfer. The transaction, which enabled a retail user to convert Malaysian ringgits, I probably mispronounced that, to euros at a significantly lower cost compared to traditional transfer services, was completed in a matter of hours, the remittance firm revealed. In comparison, the global payments rail operated by SWIFT routinely takes several days to process a transaction that is likely to incur more fees. MoneyMatch chief executive Adrian Yap said on Monday, "We are really proud to make this announcement today as we show clear evidence that a fintech startup made wholly in Malaysia by young Malaysians is capable of integrating into the Ripple blockchain and performing a live, legitimate international money transfer from Malaysia to Europe, bringing blockchain innovation to the traditional Malaysian financial services industry." After the money transfer to Spain, the Malaysian startup also triggered cross-border payments to Germany, Latvia and Ireland, the company added. As reported previously in April, MoneyMatch was one of 5 payments firms adopting XVIA, a standard API solution that allows firms to send payments over RippleNet without the need for any additional software. Now, to my knowledge, and I could be wrong here, so correct me if I am wrong, but I believe what makes XVIA special is that you don't need to establish the corridors directly from bank to bank. You just need to deal with XVIA and Ripple deals with all the rest. So XVIA is a great solution for smaller companies, for companies that don't have established connections to international banking, to other international banks, and especially for retail, for smaller firms, just not for the large banks. Xcurrent and Xrapid are what is being used primarily for these large banks. Now, as XVIA is interfacing with RippleNet, that means that this could be running through either Xcurrent or Xrapid. We don't really know. With over 100 financial institutions, including banks, payment providers, and even a central bank, RippleNet enables its members to send payments to each other on the blockchain. MoneyMatch says it is now working with other regulated partners who are members on RippleNet in countries including Thailand, India, and the United States, among others. So this is another little win for Ripple. They have a lot of little wins and they really add up. Ripple rarely has really huge news coming out, but there's a trickle pretty much daily of smaller cases of individual applications, and they all add up. All the partnerships that they have amassed over the last 2 years or so, hundreds of partnerships, a lot more still coming that haven't been announced yet. All of them testing it and then applying it, that all adds up, and you should really be paying more attention to Ripple if you aren't yet. And last but not least, we have a report here about Bitcoin futures trading growing significantly from quarter to quarter. Let's read this as well, and then I'm gonna let you go for today with a shorter video than usual. Bitcoin futures trading at the Chicago Mercantile Exchange has continued to grow in quarter 3, the US-based exchange reported in a tweet on Wednesday. The CME has revealed that the average daily trading volume of Bitcoin futures has increased by 41% in quarter 3 over quarter 2, while open interest, or the number of open contracts on Bitcoin futures, has risen by 13% in the third quarter. And we see here a rise quarter over quarter from 1,800, 3,500, 5,000, and the OI, the open, open interest, also gaining significantly 152428. So this isn't a recent trend just quarter to quarter, this has been going on for 3 quarters in a row now. Compared to the results of the second quarter of the first quarter, the trading dynamics have now been growing at a slower pace than in quarter 3. On July 20th, the CME reported that Bitcoin futures trading in quarter 2 had seen a large increase, with ADV and OI up 93 and 58% over quarter 1 respectively. CME Group is one of the biggest global exchanges and the largest options and futures contracts OI of any futures exchanges in the world. The company had also launched Bitcoin futures trading on December 17th of 2017, shortly after the launch of Bitcoin futures by the Chicago Board Options Exchange on December 10th. In early October, crypto analyst and host of CNBC's show Crypto Trader Van Neuner had predicted that Bitcoin price is about to explode in the wake of the upcoming decision on several Bitcoin exchange-traded fund applications by the US Security and Exchange Commission. In his prediction, Neuner compared ETFs with Bitcoin futures, claiming that the expectation of Bitcoin futures contracts allegedly made the major cryptocurrency rally last year from 6,000 to 20,000. Recently, Bloomberg reported that the CME was not planning to introduce futures on any cryptocurrencies other than Bitcoin in the near future. Terry Duffy, Chief Executive Officer of CME, had reportedly revealed that the company should first work on the approach to Bitcoin futures, since it might have been the most controversial launch of a product. Earlier this year, the Federal Reserve Bank of San Francisco alleged that a sharp decline in the crypto markets in 2018 had been caused by the Bitcoin futures launch. The bank stated that it considered that the subsequent fall in the price after Bitcoin futures trading did not appear to be a coincidence. So we essentially have two very opposite opinions about what futures are doing to the markets. Now honestly, I cannot come down fully on one side or the other. I see that there is immense institutional interest in Bitcoin futures and in futures for other cryptocurrencies as well. And I see both the reasoning to argue that this might cause the prices to go up and the reasoning to argue that it might be crashing the prices down. And honestly, I am just not the right person to really consider what is going on here. I'm hopeful to find out more about that in the future with more articles. I don't feel equipped enough to come down on either side here. I can see both arguments, and this might just be one of those issues where we see different financial experts disagree because there isn't a clear correct explanation. We will probably find out more after a couple years when we've seen more correlation over the years between futures and the markets in general. Anyway, with that, I'm going to end today's video earlier than usual. As always, thank you so much for watching, and make sure to subscribe if you want to get these videos to your subscription box every single day. All the links to these articles are in the description, as well as a link to my Patreon if you want to support this channel. You can support for just $1 a month, and for that you get some perks, and for $3 a month you get even more perks. So thanks a lot to my lovely Patreons. You are the most awesome people in the world. My social media links are also in there, as well as Bitcoin, as crypto donation addresses, and an email address where you can ask questions if you want to be included in a question and answer video. Thanks for watching, and I'll talk to you guys soon.